Hello dear viewers, welcome again. In this video we will see how to do equity schedule. Equity schedule. In the balance sheet we are left with two items, especially cash and equity. So in this video we'll see how to do equity schedule. To start the scheduling for equity, let's copy paste the format in fixed asset roll forward. That will help us to save our time, and yes, to save our time. So I change it here. This is equity schedule, and here also equity schedule. So I will be changing these items and figures here, but we will use this format for our analysis purpose. I will remove this. I also do not need this one. I also do not need the ending PPD as well. Here we write beginning equity, then comes increase of capital, which can be any additional paid in capital by the shareholders or by the owners of company. This is net income, which is from P&L statement. It can be a loss. All right. So let's add one more row here, which is for dividends. And the final one is ending equity. These are the most commonly observed items in the equity schedule. Yes. So what we are going to do is we are going to forecast for these 5 years. For these 5 years, we do not need the historical data for the last 3 years. We do not need. So in the case of equity schedule, we do not need the historical data for the last 3 years. What we need is the ending balance of 2021 in our case. So we can easily get this ending balance from balance sheet. Here you have 2021 is this one, equity is this one. So we take this value to our equity schedule. To take it, I have to press it equal sign, and I go to balance sheet, and then I click on it, enter. So in the same way, as we have discussed so far in the fixed asset rolling forward, the ending balance of the previous year is the beginning balance for the next year. So in our case, the ending equity for 2021 is the beginning equity for 2022. So let's link this 2 years in this manner, and then what we do is we have to calculate net income. Net income is from P&L statements. But if you come here, we don't have, we don't have taxes here. Taxes are zero, or taxes are not yet calculated. So we have to first calculate taxes. So let's assume that the company pays 40%. So we expect that the company is going to pay 40% tax rate in the coming 5 years. So let's calculate tax based on this tax rate. So I say equal sign here, and I multiply tax rate, which is 40% here, by EBT. EBT multiplied by tax rate. We have this one here. It should be minus. It should be minus since it is payment that goes out of the company. That's it. So I can copy paste the formula to other years here. So after we have done taxes, you see the net income is already adjusted automatically. So we'll be taking this net income to our equity schedule. So the reason that we have worked on taxes is that to now the net income, or to come at the net income or net loss, tax should be calculated. So we'll be taking this net income to our equity schedule here. So I set equal sign. I go to P&L statement. We start forecasting from 2022. I click here, and then if I drag this formula to all the years here, it brings all the values, net income balances of each year automatically. That's it. And then now let's assume that the company pays dividend is as a percentage of net income. Let's assume that the company pays 40%, and then it will be paying 40% in all the years. We expect that the company is going to continuously pay at the end of each year in the forecasted period, right? So we can now easily calculate dividend based on the dividend percent we have here. So dividend here is equal to, the point here is we cannot simply multiply the percentage, the dividend rate by the net income, because if there is a loss, then company will not pay dividend to the shareholders. So we use if function in this case, if function. So if it is less than 0 means if it is net loss, that means there will be no dividend. So what we do is, if the net income, which is here, is greater than 0, then the dividend will be 40% times the net income here, if the net income is greater than 0. So I multiply the net income here by 40%, which is here. If not, there will be no dividend. That means it will show us 0. That means if it comes net loss, dividend will be 0. If it's a net income which is greater than 0, then the dividend will be the multiplication of net income here by dividend rate. So we have to make sure that we put a negative sign here. We have to multiply it by -1 or negative sign, so that dividend should be written in negative number. That's it. So we may need to set up the format in the bracket. So we can simply drag this formula to the remaining years. So in this way, we can calculate dividend by multiplying dividend rate by net income in a conditional way. All right. So now let's assume that there will be no increment on capital, or there will be no paid in capital or additional capital that comes from the shareholders or from the owners of the company. So it will be estimated to be 0, no additional income. So what we know here is the ending equity is the summation of all these. So just simply sum it up here. The beginning equity plus increase or change in capital plus net income or net loss, then minus dividend, then finally comes ending equity. So just sum it up all. Since we have put the dividend in negative, it will be all right. So this means that the ending equity for 2022 will be the beginning equity for 2023. So I connect it here. That's it. Then I can simply drag this formula to all the remaining years here. And in the same way, I can drag this formula to the remaining years here. So if you click here, it shows that this value is brought down from 2023, which is 683.3 million. And if you see here, this value and this is the same, this value and this is the same. And that's how we calculate or do equity schedule. The remaining task will be taking this equity, ending equity balance for the forecasted period to balance sheet. So what we do is I go to balance sheet, I go to equity, that just an equal sign, go to equity schedule, and then connect it, enter, and then just drag it down to the other years. We have so many decimals here, just remove decimals. All right, that's it. So in the balance sheet, the equity schedule is well done. It's already well done. We have finished it, and we brought this ending equity to balance sheet. From among the balance sheet items, what is left? Yeah, we are left with only cash. We are left with only cash, and cash will be calculated after we calculate or after we have done cash flow statement. We'll be bringing cash here, and then we expect our balance to be zero. I mean, both the asset sides and liabilities and equity side are expected to be zero. Now we don't see that zero balance here. Let's see it after we have done for cash. Thank you for your time. I hope you have learned something. Stay tuned. See you with another video. Bye bye.